Thanks for checking in. Hot Sauce here. Now, as we've made a decision to manage our own money, right? As an investor, right? And you could have some allocated funds that are under management with other people, with firms and stuff like that. So, but these are the times that are critical right now. And in the past, long time in the past, I didn't understand these certain cycles, but it feels a lot like 2008 right now. If you remember that, go do some research on the housing crisis in 08. Okay, and there's reasons for why that happened. So right now, here's something that I want to share seriously and explain where I'm coming from with this stuff. Okay, now, recent reports show Berkshire's cash pile hit about $397.4 billion in Q1 2026, up from where it was at for $373 billion. The other day I said 350. Okay, he's up to close to $400 billion. Okay, this is a record level war chest, while the broader market is still nearing highs, all-time highs. Nasdaq, S&P, and so the SPY is also still trading strongly today above 741.65, while the BRK is around 483. So markets are still acting strong. That's the hardest thing about this right now. Okay, but Buffett's acting defensively. So arguably the greatest investor of all time, you've got to take a look at what he's doing. And I know he retired, but he put this cash in his predecessor's hands. So now, it's almost 400 billion. That should make every investor who's trying to manage their own money at least stop and go, what should I be doing? Because the reason I'm doing this video right now, because yesterday I was at my computer, as well as Monday. I'm really focusing on my next cover call play that's nice and safe. I'm looking at food stocks like General Mills and things away from technology. It's Chipotle, CMI, because I've made some money on them before, and we're in this time of where I'm looking, I'm kind of reaching, I'm stretching, because I've always also heard that if your money's on the sideline and you're just wasting, you're wasting your money, because the stock market only get, the main 5 to 7 days an entire year are most of the gains and all this thing. So I'm not listening to all that anymore. I'm watching what the big boys are doing, and we're getting manipulated. There's market manipulation. There's no way with this war and everything that we should be, again, looking at all-time highs, reaching all-time highs. Go back and look at these charts, dude. They just don't look right. When you stretch it back on the Nasdaq and the S&P, back to like 2020 and stuff like that, this past month doesn't look right. There's no reason for why this huge pump should be happening. It's scary. It's scary, okay? I'm not saying the market's going to crash tomorrow. That's not how these things work. As I do more research, I start to understand it. It's slow and steady bleed. Okay. Buffett doesn't usually build a cash pile like this because he's excited about some kind of stock price that he's looking at. He builds cash when he doesn't see enough value, and when he wants dry powder for the next big opportunity. Things are too expensive right now. PE ratios are too high. Not to say that you shouldn't buy when the PE ratios are high, because after they drop, there's an equation that shows higher PE ratios are sometimes a good time to get in. Okay, keep that in mind. And so, stock market is at all-time highs. AI stocks have been ripping. Okay, I'm looking at some notes. The S&P, Nasdaq have been strong. Everybody feels like they have to chase the FOMO. Okay, this is true FOMO right now. Retail investors, man, I'm scolding you, because you guys are chasing green candles, which is keeping these inflated these prices that are artificial. It's retail investors that are doing this. Buffett's doing the opposite. He's not chasing green candles. He's pulling cash. He's raising cash. And historically, when the market gets expensive, the smart money doesn't always sell everything, but they do get more selective. They reduce the risk, wait for better prices. That's why I think this could be a major warning signal for all of us just trying to make some money here. Okay, this isn't a guaranteed crash. We're not talking about that. No guaranteed recession, but honestly, the last recession took 4 years to at least recover and find the bottom. You can look on this thing. It's on the Fed, the HUD, Urban Development, Housing and Urban Development website shows this looks exactly like it did in 2008 and 2009 in terms of the price on the chart is rolling over. It looks very similar. Get on that site if you guys are interested in checking that out. Okay. So I was sitting here. I'm like, okay, let me ask, is Buffett wrong? Is he getting too old and kind of getting crazy and not making the right decisions? Or is he early, smarter than all of us, and doing something that we should be doing? Okay. Because Buffett, he's always early on stuff. If you do some research, he doesn't try to time the exact tops. He just refuses to overpay for things. And I mean, that's what we should be doing. That's the lesson. Don't overpay for things. So for my own investing people, I'm not selling everything, but I do think this is the time to be careful. Raise some cash. Don't chase these breakouts. Sell the covered calls. I've been doing that. When premiums make sense, it's a little more volatile, so you can get some good premiums. Take profits when they're there. Okay, wait for high probability setups. Because if the correction comes, cash is power. It's so hard to sit on cash right now. I've worked so hard to keep a little pile of cash, and it's just sitting there not working for me right now. It's hard. Okay, but cash lets you buy when everybody else is panicking. Okay, that's what Buffett's done. Oh, Buffett, you know, he does it better than almost anybody for decades. So when I see Berkshire sitting on nearly $400 billion in cash, I take that serious. Okay, I'm gonna treat it like this, like a yellow warning light, not a panic, right? We just need to slow down and prepare. These inflation numbers are crazy. It's more than 6%. It's higher than what the expected numbers were. We're going to see this crazy inflation. Food prices are going to get out of hand. You can see it in housing too. And I need to, you know, my son's looking at buying a house right now. I gotta make a call right now and show him some of these numbers I saw. But it's kind of like '08. It keeps the number of foreclosures from year over year are insane right now. Foreclosures are going up. Prices are inflated. Homes aren't selling right now. So if you put all this, the two and two together, gosh, it's so hard to just sit on cash when we want to make money for us. My message today, there's going to be better prices on crypto and the stock market in this summer. Okay, we're talking, you know, a few months out. The top should hit in 2026 at the end of the summer is what I'm hearing, and then we're looking for a huge crash after that. I'm looking for prices to just dump after that, and hopefully get into life-changing gains as we move forward in this particular cycle. So, hey, thanks for checking, everybody. Appreciate you. Give me that thumbs up if you would, please. That's a message. Take this very seriously, what I'm saying right now. So when it turns time for you to make a decision on your personal investing, you have learned to be mature and patient about making decisions and not paying too much for things. All right. Thanks a lot. Hop Sauce signing off. Peace out.